Hello and a warm welcome to Invest Africa. I'm Nuzi Pombanja. Now, they say that Africa has the fastest growing middle class in the world, driven by stronger economic growth. And research done by Standard Bank claims that Nigeria's middle class grew by 600% in a 14-year period, which amounts to about 4.1 million middle-class households. But this figure is only 11% of the population. So how large is Africa's middle class, and who are they exactly? That is the vexing question on the table tonight. And joining me to take on this question, we are joined in Cape Town by Simon Freemantle. He's a senior analyst in the Africa Political Economy Unit, this at Standard Bank. And in Lagos, we're joined by Kayode Akindele. He's a partner at Tia Capital. Gentlemen, thank you so much for making the time to join us. Let's get the definitional issues out of the way. And Simon, let's bring you in first. It's not the first time that we're hearing of this now rather catchy phrase, the African middle class. Who exactly are we talking about? And has the phrase evolved somewhat from when it first made headlines in African contexts?
Yeah, I think it has evolved, or at least our report was aiming to assist in that evolution, given that we felt that the middle class term and at least the estimations around the size and the spending power of the middle class were a little too exaggerated. So we needed to go and evaluate what we felt would be a more appropriate measure of a middle class household in the African context. And what we did was we really looked at South Africa. We said, where in South Africa do we set a middle class in terms of a household's consumption capabilities and its capacity to spend outside of core necessities or staple goods and so on. And broadly, what we did is we set that figure at about $25 a day for African households. Between $25 and about $110 we saw as being comfortably a middle class household. So obviously closer to 25 is your lower middle class, or certainly in the very early stages of middle class growth. And then very comfortably your households that have between $50 and $100 of consumption per day, not necessarily income. So that's definitionally how we ranked it. And we used, as I said, South Africa as a barometer for that.
Kayode, how does this compare to the Nigerian understanding of what the middle class or who the middle class are? And in particular, let's get your comment on the $25 that Simon uses as a benchmark for the South African context.
I think compared to Nigeria, if you look at it in terms of definition of middle class, it changes slightly, because they often say in Nigeria, I think a lot of people use the barometer of the minimum wage, which is about 17,000 naira initially, at least at the federal civil service level. Now, when they look at people with disposable earning power, because Nigeria has a much larger informal economy than South Africa does, it's very difficult to know the disposable income of households, because a number of households have income that are from the informal economy. So if you just look at what the tax or salaries might show, it doesn't show the whole picture. So that has been the biggest problem in Nigeria, is underestimating the size of disposable spending power of Nigerian households because of the size of the informal sector. I think once researchers start looking more into the formal sector and try and look at anecdotal evidence from things like mobile phone subscription, cable TV subscription numbers, and try and draw a better picture of spending power of the Nigerian middle class, it's shown that it's actually a growing and much bigger middle class than people originally thought.
So Simon, just to come back to you, one of the earlier comments you've made is that through Standard Bank there has been a contribution to refining this concept of the African middle class, and we've spoken a little bit about the income thresholds. Do we now have a better understanding of how big the middle class is, not only for South Africa, but do we have a continental understanding of the size of the African middle class? And I guess the question really is this a homogeneous group, and can we refer to anything as an African middle class?
So, I mean, the first answer is yes, we do have a better understanding of that. I mean, the study that I did looked into 11 sub-Saharan African economies. South Africa is very well studied. We have great statistics here. We have credible and reliable updates of those statistics. So it's much easier to gauge what the income and middle class growth is here. So that's fairly well understood. It's really in the other economies, and Kayode mentioned how difficult it is in Nigeria, but that's the same for all sub-Saharan African markets, to understand what income spending power is when a lot of it is captured outside of the formal economy. But we looked at these 11 key pivotal sub-Saharan African economies. Nigeria was, of course, one, Ghana, Kenya, Tanzania, Uganda, Zambia, etc., Angola. And through those 11 countries, what we saw was that last year, our estimation, and it's a broad one, was that there were roughly 7.6 million middle-class households across those 11 countries last year. Now, if you look at South Africa last year, there were probably between 5 and 5.5 million middle-class households last year. So the immediate takeaway is that South Africa's middle class is almost as big with 50 million people as these 11 countries are with 500 million people. So there's a tremendous disparity there. South Africa is more advanced, it's more mature, the consumer side of things is much more developed. But by 2030, if we extrapolate outwards, we expect that the middle class in these 11 countries is going to grow from about 7.5 million households today to about 23 million by 2030, whereas South Africa's will probably grow by 2 or 3 million in that same time frame. So there'll be a big disparity. So yes, we did gauge a little better of more of an understanding as to what the growth is and the dynamics are of the middle class. Whether it's homogenous or not is an open question. For the most part, no. Country dynamics are vastly different. East Africa presents much smaller middle class figures than West Africa, than Nigeria and Angola and other countries, given the lack of resource wealth and the lack of petrodollar really fueling consumption and infrastructure build in those economies.
And certainly, my next question would have been the regional insights, which I think you've just begun to share with us. So maybe let me get onto the opportunities that this growing demographic band represents. And Kayode, let's come to you. And in particular, investors who are looking at Nigeria and investing in the Nigerian market, where should they be looking if they are wishing to leverage off this growing band?
I think in Nigeria, a lot of investors are targeting initially the urban areas. They're easier in terms of transport and logistical links compared to the rural areas. And there's been a noticeable increase in the disposable income of families, especially in the urban areas. If you look at the key areas in Nigeria, obviously of Lagos, Port Harcourt, Abuja, and then some of the Kano, for example, you look at have a sizable population there where consumer spending has increased and disposable income, and people are targeting those areas. Now, the key thing about Nigeria is it's one, the two key things investors have to look at. One is logistics. Logistics is still very poor in many areas of Nigeria, especially because of the transport infrastructure, which is below the standard of they would expect. Although there are plans to upgrade that. I think the second thing is making sure their product is indigenized to an extent, and that a lot of investors have found it difficult to try and just transplant foreign products into the Nigerian market because the Nigerian market doesn't fully understand the product and it doesn't take. But for companies that have been successful, companies that have made to make their product more Nigerian in value. An example I used Heineken, for example. Heineken had a very local themed advertising campaign, which has done very well for the Heineken brand in Nigeria, and using Nigerian slogans and catchphrases to pull in local consumers.
Simon, let's pick up on those. The two points that Kayode makes. One is infrastructure as it relates to logistics, and the second one being the localization of products and services in those specific markets. Can we generalize and say that perhaps these two insights are applicable to most African markets for investors who want to get onto the bandwagon of getting returns from the bulging middle of this pyramid that we're speaking of?
Look, I wouldn't go too far into consumer analysis because it's not something, sort of marketing and consumer analysis is not something that I look at particularly. And I do think it varies. I mean, in some product groups, you want to emphasize your globalness. You want to emphasize that you're a globally competitive, dynamic, well-branded product. In others, I think it makes a tremendous amount of sense to localize. And in beverages, in breweries particularly, we found great success from those brands that have been able to create a local identity. But just taking a step back, what we've seen is in this income growth, the sectors that are providing the most immediate opportunity, so those that are capturing the income growth that we're finding now are broadly in fast-moving consumer goods. So, you know, the kinds of products that rising African consumers are buying in shopping stores, as well as in the informal market. I mean, the informal market in Nigeria and Uganda is tremendously sophisticated. You can buy a bottle of whiskey, you can buy most consumer goods in the informal market as well. And then the second line is really just around food, around new outlets providing food for this rising income group as well. Now, there's a concern attached to that. You know, a lot of the new, what they call lifestyle diseases being brought about in these big, fast-growing urban centres by the proliferation of fast food takeaways, which is really tapping into that income growth. Clothing, of course, we've seen South African companies like Pep really spreading out into those markets. And I think when a household has more capital to be able to allocate to non-essentials, those are the kinds of areas where we're finding tremendous growth. And then, of course, in pharmaceuticals as well. So these are the sweet spots. Now, further down the line, of course, as these consumers migrate upwards, they'll start taking more holidays, they'll shop in more high-end stores and so on. But at the moment, that's the real sweet spot of some of the growth and opportunity we're finding.
And just to tag on to those sweet spots, Kayode, before we get into the break, can you give us an insight as to what the Nigerian middle-class consumer is actually buying? Is it the same sectors that are attracting the majority of their income as presented by Simon?
I think the Nigerian Bureau of Statistics has a pretty good household survey which highlights key areas that Nigerian middle class especially are spending on, and it's slightly different from what you was expecting in a more developed climes because of different price points. For example, things like mobile communications, data service in Nigeria, for example, is much higher than in the UK or New York, for example. So a greater portion of income is spent on things like that, and telephone and use of telephones and issues like that. The mortgage market in Nigeria is very underdeveloped, so you find a lot of households are actually paying rent rather than mortgages in that area. So I think that there's subtle differences in that. But I think if you look at the more key areas like education, try to increase education spend for their children, taking more holidays. If you look at passenger numbers in Nigerian airports, they've increased markedly over the last 5 or 6 years. And you see more top-end, I won't say top-end, more middle-class aspirational, especially South African companies like ShopRite doing very well in Nigeria with very good, very strong sales, and people like Spar coming in. And you find that a lot, especially in the urban areas, a lot of consumers are moving away from the old open market model to more of the supermarkets and shopping centers where possible. Now, the issue when infrastructure comes back into play is things like Lagos, for example. If you speak to the guys in ShopRite, they will tell you quite plainly that the difficulty they have is real estate prices are so high, they can't find enough suitable real estate in urban areas to actually open up shopping centers. And that is a key stumbling block for them. Thank
you for that insight, and we'll certainly pick up on more of those insights when we come back from the break. And of course, Simon, they're laying to rest a lot of the definitional issues that we've had around this concept of an emerging middle class. Let's take a short break, but when we come back, let's continue to unpack this term and really understand what it means for investors looking into Africa. Welcome back to Invest Africa. Tonight we're unpacking Africa's emerging middle class. We're finding out who they are and where the investment potential lies. Remember that you can tweet us and be a part of these conversations. That's by following @CNBC Africa and using the hashtag InvestAfrica, and of course following me @TheRealNozi. Still with me, I have my guest, Simon Freemantle. He's a senior analyst at the Africa Political Economy Unit, this at Standard Bank. And Kayode Akindele, he's a partner at Tier Capital. Gentlemen, thank you for making the time, of course, and welcome back. Simon, let's go back to another contentious issue. There are reports that suggest that what we understand as the emerging African middle class really refers to the bulging middle of a pyramid. But what we're actually seeing is a few number of Africans who are at the apex of that pyramid who are getting increasingly richer, and thereby suggesting that as much as we have an African middle class, we also have entrenching poverty or entrenched poverty on the continent. How do we make sense of that argument?
No, it's true. In our study, we looked at, as I said, 11 pivotal countries, collective population of 520 million people, thereabouts. And as I said earlier, there were 7.6 million middle-class households out of that total population. So out of roughly 110 million households across those 11 countries, almost 86% of them, 86% of them are low income. So, and within that low-income category, at least half of them are living very, very close, if not well below, the poverty line of $2 a day. So Africa remains a tremendously marginalized in terms of income region as a whole. That is true. And I think there has not yet been enough signs that the very impressive growth that we've seen in sub-Saharan Africa in the last 5 to 8 years in particular has been able to trickle down, that there's been meaningful, substantial growth from the bottom. Now, there are some statistical challenges in measuring that bottom level income, but it is very clear that there is a disparity in the fortunes of the upper end versus the lower. Now, that said, it is still clear that in some of your larger economies and some of your more advanced economies, Nigeria, Zambia, Ghana, Kenya, and so on, that you're starting to find the very real signs, and this has really sped up in the last 5 years, of a middle income band start to manifest. Now, as I mentioned, today it's small. In comparative terms to South Africa, it's very small, particularly when you take the size of the populations of these countries. But in 15 years' time, we expect that growth will be substantial, and it will really start to at least reduce that income disparity, which is a worrying sign. You obviously want growth to be coupled with some type of equality, some type of lessening of income inequality. And as yet, we've not yet seen that happen substantially in our key markets.
I'll get Kayode to comment in a moment about the West African experience in particular. As you mentioned, Simon, some of those markets that you list lie within that region. But Simon, perhaps a follow-up question for you. In one of your earlier comments, you made mention of the fact that the growth of the African middle class in South Africa is expected to be somewhat slower than in other markets. Give us some insights as to why we're going to see a slowing growth in South Africa if we've already managed to be first off the block compared to other African markets.
Well, look, I mean, the very basic dynamics of that are threefold. First of all, we have a much, much more mature market as it stands. So the base effect is important. We're at a higher point to grow from, and it's much more difficult to accelerate the income growth dramatically when you already have a fairly established consumer base. Second, and linked to that, of course, is that our economy is growing much slower. This year we'll grow at just over 2%. We expect that we're not going to grow much more than 2-3% for the next 5 years. Whereas these other economies that we're looking at, Ethiopia is growing at 7-8%. Tanzania, Kenya this year is going to grow at 7%. Nigeria will slow this year because of the oil effect, but it's just come off the back of 6 or 7 years of 6+% growth. So of course the growth effect is very important. And then finally, population growth. I mean, South Africa's population growth is about 2% a year. In these other markets, you're finding fertility rates still in the realm of 4 to 7. So you still have households which have between 4 and 7 children per household. In Zambia, for example, it's one of the highest population growth rates in Africa and, in fact, in the world. So I think those three factors combined really show that the growth in these markets is going to be more compelling than it is in SA. Another area that I would suggest will drive some of the growth outside of South Africa is the early signs that we're starting to see of governments starting to provide social support. So cash receipts, cash grants to households every month to support those that are in absolute poverty. Now, we know in South Africa we initiated the social grant system 20 years ago, but in the last 10 years it's ramped up dramatically, with child support grants going from about 2 million recipients to over 11 million last year. So, and that's been one of the big drivers, not necessarily of middle class growth, but of income growth as a whole, of your lower band shifting upwards. Now, there isn't much government support in these other key markets, but we expect that to start to come on board. In fact, Kayode can perhaps mention about Nigeria. The new president has promised that he'll start to deliver very substantial social support to the poorest households in Nigeria. Whether he's able to is a question, but that would lead to an upward income migration for sure.
That's really interesting insights there, and I'm definitely going to let Kayode to take on that comment, and perhaps Simon will come back and talk a little bit about that lagging of income behind the demographics, in particular around the East African region. But Kayode, let's table a couple of questions to you. The first one, of course, being in South Africa, as Simon has explained, we have a huge income disparity. How does this look like in the Nigerian market? Are you also saying that your middle class and emerging middle class is not necessarily bulging at the middle of that pyramid, and that we're actually in essence talking about an elitist view at the apex of that pyramid before we get to the other questions?
I think Nigeria is pretty similar in that regards. I think Nigeria has what we call middle class strata that comes across. I think the top end, the upper strata of Nigerian society is very small, and it's of big difference between that and the middle class. I think if you look at the top strata of Nigerian society, there's a massive gap between them and the middle class, and I think that shows what's happening. I think if you look at the middle class and the lower income, I think they're getting closer than they have been in the past. And especially if you look at the professional classes like teachers, civil servants, which have had a bit of a growth spurt in the last 10 to 15 years with the advent of this new democratic system in Nigeria, that has helped to grow the middle class. But I think there's a very big difference between the lower income, the gap between the middle class and the lower incomes, and the gap between the middle class and the upper classes in Nigeria, where you have any number of dollar billionaires and with very different lifestyle from most.
Very different lifestyle from most. Let's quickly talk about President Buhari and if that social support is expected to come through. Kayode, take on Simon's comment there where he says this could actually make a fundamental difference to the actual size of the Nigerian middle class.
It will, if it can be done. I mean, to be honest, it was a campaign promise and it hasn't really been costed. And with the way oil prices are, it's going to be very difficult. Although the Buhari's government believes that if they close up leakages in the economy, they'll be able to afford it. I think if you look at the last 4 or 5 years, Nigeria has experimented, using Brazil as an example, of bolster-like payments, where you try to aid the lower income through various different things, either cash injections, targeted cash injections, or things like free meals at schools for primary school children, which have been spearheaded in a number of states, especially in the southwest, which they are planning under the Buhari government to now spread nationwide to provide at least one meal per day for each child in primary school, to encourage both more children to come to primary school and ensure they have at least one good meal, which will obviously help in that process. I think there was a mention of 5,000 naira a month to poor people in terms of cash transfers. The problem we have in Nigeria is that it's very difficult to identify the population in that sense. We do not have a national ID card system. So it's difficult, which has a lot of security issues and also causes a lot of other problems. To identify and make sure that the people who deserve to get that cash injection do get it is going to be difficult. But I think if you work through things like cooperatives, using the school system to identify areas like that, they could be successful. But the big issue is cost. And with where the oil price is at the moment, and the state of Nigerian reserves and the Nigerian finances, it will be difficult to do.
Data continuously comes up in the conversation, and the absence of data and statistics in the African context continuously rears its head up in this conversation. But let's park that for a moment, and Simon, let's get some insights around East Africa, and in particular, one of those interesting findings that the incomes increases are actually lagging behind the demographics in that part of the continent. Why is that?
Look, it's comparative. I mean, it's compared, as I alluded to earlier, against some of your big oil exporters, Angola and Nigeria primarily, where we've seen bigger and more robust income growth. And I think that is a big part of the answer. You know, your East African economies that we included in the study, Kenya, Uganda, Tanzania and Ethiopia, have not substantially, until recent oil finds in Uganda and to an extent up in Kenya as well, been large exporters of valuable commodities. I mean, Tanzania is gold and some others, but really the resource value add that other economies have had in terms of churning that money into infrastructure, in terms of allowing that to filter through in one form or another into consumer spend. East Africa's not had that to the same extent. They've also had far more rapid population growth, and so we found that income and economic growth has not been able to really keep track. Now, in Ethiopia's context, we know that the last 5 years of economic growth have been very impressive, and we've seen reforms in the last 10 years have really provided for that. But in the couple of decades before the turn of the century, Ethiopia's growth rate was anemic, was terrible. With the government management of the economy was very poor. So you found that population growth was very big at a time when the economy was simply not expanding. So that has prevented Ethiopia from having a more substantial and robust middle income band to start off with. And it'll take some time before Ethiopia develops a scalable, sizable middle class. The opportunities there are really in the lower band of the segment. It's not to say there aren't consumer opportunities in East Africa. There are very large ones, very profound ones.
Right.
But they're not the same as the ones that you would find in your more advanced and mature consumer markets.
Well, what we've done in this show is we've unpacked and refined this concept of an emerging African middle class and what it means for investors looking to reap their investments or sow their investments rather and reap returns in the African context. A very big thank you to my guests for joining me. That's Simon Freemantle, Senior Analyst at the Africa Political Economy Unit at Standard Bank, and Kayode Akindele. He's a partner at Tier Capital. Now, please remember to send us your comments. The details are on your screen. For myself and the Invest Africa team, it's goodbye.